expenses is
So
run
there are
by
two trends I think I would highlight. One,
Morningstar
so far for
help
banking.
take quick.
We're going to start a semi-regular segment where we discuss two funds that may either sound the same or may be in a similar category or be in a similar asset class. But what we want to highlight about these funds is how different they actually are, how different the processes are, how different the strategies may be, the different investment styles that the investment managers may use. So today we're going to talk about two bond funds. One is the Trimark Floating Rate Income Fund, and the other is the BMO Bond Fund. So Nick, why don't you get us started on the Trimark Fund?
Sure. Well, these are two very different funds, two different mandates. Trimark Floating Rate Income is a fund that consists of senior secured floating rate loans. Now, these loans are typically made to below investment grade corporations. You can kind of view them in a similar lens as high yield credit as well. And so there aren't too many options within Canada to get access to a pure floating rate loan portfolio. So that's quite different from the BMO offering.
That's right, and the BMO fund is your regular core bond fund. It's benchmarked to the DEX universe, so it invests in your regular, government bonds, corporates, and what you generally see from a universe bond fund. But it is a conservative fund. It is, there's a limit on how much credit the manager takes on, up to 50%, and there's also a limit on how much duration the manager takes on. So it's a conservative bond fund, and that's very different from the Trimark fund.
Yeah, conversely, the Trimark Floating Rate Income Fund takes on a lot more credit risk. Like I said, typically these loans are to below investment grade corporations, and on the plus side, as I compared them earlier to high yield credit, these loans typically rank ahead of, in the case of a default, rank ahead of most other creditors, and so recovery rates tend to be much better. But like I said, you're taking on a significant amount of credit risk, and in periods like the financial crisis that we went through, we did see this fund lose a significant amount of money, double-digit losses as credit spreads widened out and liquidity dried up.
Yeah, the BMO Bond Fund hasn't had great performance either over the long term. We think there's a variety of reasons why that's the case. We think the management team is a bit stretched at this point. We don't think the process is being applied consistently, and that's why we're really not recommending this to investors at this time. Whereas the Trimark fund, we think it's a pretty good offering.
Yeah, performance on the Trimark fund, aside from that tumultuous period, results did bounce back, and the peer group here in Canada is pretty small. But if you compare the U.S. dollar version of this fund to a peer group of U.S. funds that also invest in this space, it ranks among the very best of them. So performance has been good, and this investment team, the fixed income team at Trimark, is one that we feel has done a pretty decent job on other mandates as well, and have a pretty straightforward credit approach to investing.
Yeah, so it just goes to show how different two bond funds can be. One is your core bond fund offering, whereas the other is more of a satellite where investors, it wouldn't be their main holding, but it would go in with some other investments.
Absolutely, and going forward, if you're someone that's concerned about perhaps rapidly rising rates, the Trimark Floating Rate Income Fund is better positioned to handle that just by nature of its underlying holdings. These floating rate loans typically reset every 90 days in lockstep with short-term lending rates, and so it eliminates much of that interest rate sensitivity.